Welcome to my channel, I'm James, and today I'm going through my valuation methods for Microsoft and why I still think this is a cheap stock. What I'm going to be doing today is analyzing their financial statements and then using two different models to get my price target of the stock using discounted free cash flow and the Buffett-Graham intrinsic value. Is this stock a buy or a sell? So what is Microsoft? It's an American multinational technology company which produces computer software, consumer electronics, and personal computers and related services. It's best known for its products such as Microsoft Windows, Microsoft Office, its hardware products such as Xbox, and cloud solutions such as Azure. Currently, Microsoft is $308 a share, down from its all-time high of about $350, but even with that, it still had an absolute crazy past 52 weeks. It's up 37% on the year, which has easily beat the S&P 500, which is up about 18% in that same time. Microsoft has just made massive news by buying video game maker Activision Blizzard for $75 billion, which is expanding the gaming world on the Microsoft side. So let's have a look at the fundamentals of the stock. Currently, Microsoft has a market cap of $2.4 billion. It's in the technology sector and has a share price of $308, 52-week low of $217, and a 52-week high, and its all-time high of $349. It pays a 0.8% dividend. And if you buy your shares before the 16th of February, you're eligible for that dividend. So first we are looking at, is the PE ratio less than the market? No, it's not. Microsoft has a PE ratio of around about 34.48, and with a market of 26, it is higher than the market average. Next is the revenue increasing, and yes, it is $125.8 billion to $176 billion. In the last quarter, you can see Microsoft had $45 billion in revenue, and this was split between their three revenue sources, which is productivity and business processes with $15 billion, intelligent cloud, which is now the largest at $16.9, and more personal computing, which is $13 billion. As said before, business and productivity includes their Office, LinkedIn, and Dynamic Business Solutions. Intelligent cloud is Azure and other cloud services, and more personal computing is the Windows devices such as PCs and the gaming, which is Xbox. So as you can see, the cloud is now the largest part of Microsoft's revenue. Next, we want to see if Microsoft's profit is increasing, and yes, it is. It's gone from 40 billion to almost 68 billion, so that is a massive pass. And if we look at the previous quarter here on the operating income, you can see this was split pretty evenly between productivity, business process, and intelligent cloud with 7.5 billion each, and then more personal computing with 5 billion. So overall, that was 20 billion of operating income in the previous quarter. Now we want to see if Microsoft is buying back their shares, and the reason for this is if there is 1 million shares and 2 million of net income, then the earnings per share is 2. But if they buy back half those shares, it's now worth 4. And yes, Microsoft are buying back their shares, 7.7 billion to 7.547 billion. So that is a massive pass there. And finally, is the free cash flow increasing? Yes, 40 billion to 60 billion. So that's a massive increase there. You can see that Microsoft has been increasing their free cash flow, which they can use to buy back shares, pay dividends, and make acquisitions, which is what they've been doing with things like Activision. The only failure was the PE ratio less than the market, and Microsoft is very rarely under the market average because it's a very large growth stock and a tech stock as well, which is normally have higher valuations. But the rest of all passing, fundamentally, the company is solid. The free cash flow ratio is the market cap divided by the most recent free cash flow, and that has a multiple of 40, which is quite high, but it is in line with the PE ratio. And is their dividend safe? Yes, it is. They pay $20 billion in their dividend, and with a free cash flow of 60, it is very, very safe. Now we're going to look at our two valuation methods. First is discounted free cash flow. We've calculated the future free cash flows and discounted them to today's value. You can see this is based off future analyst estimates on the revenue, and then this then works out the net income and free cash flow based on those averages. So what is the terminal value based on discounted free cash flow? Well, you can see actually it's very close to what it currently is, $311.99 with a 1.29% discount. So discounted free cash flow does not love this stock despite the mass amounts of free cash flow there are. As you can see here, 2021 has been a bit of a down year in terms of the averages. So if we think that 2021 is a bit of an outlier, and if we update these ratios here with the 2019, 2020, and 2018 numbers, you can see that actually would have it at an 8% discount at $333. So still a massive increase, but an increase nonetheless. And if you look at the Buffett-Graham intrinsic value that takes earnings per share and expected growth rate into account, Microsoft has an earnings per share of $8.95 and an expected growth rate of 16.53%, and even with Microsoft's massive size, it still has a large growth opportunities because of its cloud, and the Buffett-Graham intrinsic value gives Microsoft a fair value of $371.96. So both of the models are saying it's a buy. It's still undervalued right now according to these models, and the Buffett-Graham intrinsic value liking the stock a little bit more because of that massive growth rate. And finally, what are analysts saying about the stock, and do they agree? Well, overall, the consensus is a strong buy with 27 buying and 1 holding, and the average price target from this time in the next year would be $373.88. On the high side, it would be up to $425 a share, and even on the lower side, it's about $320. So analysts are in love with this stock as well.